The thrill of yield max ETFs, exchange-traded funds that promise sky-high yields, often 30%, 50% or more, using a wild option strategy that's got Wall Street buzzing. Buckle up, because we're about to dive into this high-octane world of income investing, where the rewards are juicy, the risks are real, and the story is anything but boring. Yield Max ETFs are turbocharged income machines built from the ground up to squeeze every drop of cash flow out of the market. Launched by Tidal Investments and Zega Financial starting in late 2022, they've exploded onto the scene. 43 funds strong by early 2025, managing over $10 billion. Their secret sauce? Options. Specifically, they use a synthetic covered call strategy to turn stock volatility into a gushing fountain of payouts. Picture this. Instead of owning a stock outright, they juggle call and put options to mimic it, then sell extra calls to rake in premiums. Those premiums? They're your dividends, delivered weekly or monthly like clockwork. Let's break it down with a bit of a heist movie vibe. Think of YieldMax as a crew of financial masterminds. They don't burst in with guns and rob the bank, the stock itself. They sneak into the vault, the options market, grab the loot, premiums, and slip out before anyone notices. Take Tesla, for instance. The YieldMax Tesla Option Income Strategy ETF, or TSLY, doesn't buy Tesla shares. It creates a synthetic version using options, then sells calls against it. If Tesla's stock zigs or zags, TSLY collects the cash from those premiums. In 2024, TSLY's yield hit over 50%, meaning a $10,000 investment could have spit out $5,000 in distributions over a year. That's the kind of payout that makes you sit up and listen. But here's where the plot twists. These ETFs don't always own the stocks they're tied to. They're like a hologram, mimicking the real thing without touching it. This keeps costs low, but adds a layer of complexity. The funds pay out monthly, or for some, weekly, and those distributions can include profits, option income, or even your own capital handed back to you. Now, that last part, return of capital, sounds like a buzzkill, right? It can erode the fund's value over time, like a slow leak in your tires. Yet for income junkies, the immediate cash flow is the star of the show. Now let's talk frequency. YieldMax offers two flavors, weekly and monthly payers. Weekly ETFs are the sprinters, fast, frequent cash drops that keep your adrenaline pumping. Monthly ones? They're the marathoners, pacing themselves but still delivering hefty yields. As of March 3, 2025, the lineup's packed with options for both, tied to everything from tech titans to crypto kings. The catch? High yields come with high stakes. If the underlying stock tanks, the fund's NAV, or net asset value, can erode, and those dreamy payouts might not last forever. It's a high-wire act. Thrilling if you time it right, nerve-wracking if you don't. Let's spotlight some weekly wonders first. These bad boys pay out every 7 days, perfect for anyone who loves a regular cash fix. Number 1. YieldMax Magnificent 7 Fund of Option Income ETFs, or YMAG. Yield about 40 to 50%. This ETF's a blockbuster mashup, bundling option strategies on the Magnificent 7 tech giants. Think Apple, Nvidia, Tesla. It switched to weekly payouts in 2024, and with yields pushing 50%, it's a fan favorite for income hounds who want tech exposure without the snooze. Number 2. YieldMax SDTY. Yield to be determined, new in 2025. Fresh on the scene, SDTY's details are still unfolding, but it's pegged as a weekly payer targeting a single stock or sector. Posts on X hint at a debut distribution announced February 19, 2025. Keep an eye out for this rookie's yield. Number 3. YieldMax GPTY. Yield to be determined, new in 2025. Another newbie, GPTY joined the weekly club in early 2025. Tied to an undisclosed stock, rumors swirl around ChatGPT's parent, OpenAI. It's poised to deliver frequent cash with that YieldMax flair. Now let's pivot to the monthly heavyweights. These 7 ETFs dish out distributions every 30 days or so, blending stability with jaw-dropping yields. Number 1. YieldMax Tesla Option Income Strategy ETF, or TSLY. Yield about 40 to 50%. Tesla's volatility is TSLY's playground. Monthly payouts have hovered around 80 cents to $1 per share in 2024, making it a go-to for Elon Musk fans craving income. Number 2. YieldMax NVIDIA Option Income Strategy ETF, NVDY. Yield about 40 to 45%. NVIDIA's AI boom fuels this beast. With monthly distributions topping 80 cents per share recently, it's a tech lover's dream, assuming the chip craze keeps sizzling. Number 3. YieldMax Coin Option Income Strategy ETF, or CONY. Yield over 60%. Tied to Coinbase, this ETF rides crypto's wild waves. Monthly payouts hit over $1 per share in 2024, but if Bitcoin stumbles, so might CONY's magic. Number 4. YieldMax MSTY MicroStrategy Option Income ETF. Yield over 100%. This one is bonkers. MicroStrategy's Bitcoin obsession drives yields through the roof. Monthly distributions have topped $2 per share, though NAV erosion's a real risk. Number 5. YieldMax Disney Option Income Strategy ETF, or DISO. Yield about 30 to 40%. Disney's family-friendly empire gets a YieldMax twist. Monthly payouts around 60 to 80 cents per share offer a steadier ride than some flashier peers. Number 6. YieldMax Netflix Option Income Strategy ETF, or NFLY. Yield about 40 to 50%. Netflix's streaming dominance powers this fund. Monthly distributions near $1 per share make it a binge-worthy pick for income seekers. Number 7. YieldMax ExxonMobil Option Income Strategy ETF, or XOMO. Yield about 30 to 35%. ExxonMobil's oil riches fuel this ETF. Monthly payouts around 50 to 70 cents per share bring energy sector stability to the YieldMax lineup. So why dive into this? For starters, the yields are irresistible. If you're retired, building a side hustle, or just obsessed with cash flow, YieldMax ETFs turn the market into your personal ATM. Reinvest those payouts and you're compounding like a mad scientist. But here's the heart-pounding part: the risks. NAV erosion is the silent killer. Those fat distributions can hollow out the fund's value if the underlying stock flops. Plus, option strategies thrive on volatility. If the market goes flat, the premiums dry up. And don't forget expenses. Most YieldMax ETFs charge 0.99% annually, steeper than your average index fund. Picking winners means playing detective. Check the underlying stock's health, Tesla's innovation, NVIDIA's AI edge, Coinbase's crypto bets. Dig into distribution history. Are payouts steady or erratic? And diversify. Mix a wild card like MSTY with a steadier pick like XOMO. As of March 3, 2025, these ETFs are riding high, but the market's a fickle beast. Posts on X buzz about YMAG's weekly switch and TSLY's Tesla tie-in, showing the crowd's hooked. In the end, YieldMax ETFs are the financial equivalent of a blockbuster thriller. High stakes, big rewards, and a few jump scares. Whether you're chasing weekly cash with YMAG or monthly hauls with TSLY, you're in for a ride. Just keep your eyes open and your portfolio balanced.